You probably clicked on this video because you've seen The Big Short and you want to be Michael Burry and you want to be this guy who shorts the top of the market. But I'm going to break down exactly why there really is no point in you making life hard for yourself and why you should primarily focus on high time frame longs. Disclaimer, shorting works on the daily chart, it works on the weekly chart, but it typically is a lot harder. You can only short back down to zero. You can long, to whatever. Technically, sky's the limit, right? So you should really be focusing your time on longs as opposed to shorts. Remember, this is my research. Please do your own work. Thank you very much. So look, the argument. Things just tend to go up and to the right. On all assets, if you look at all the charts, you zoom out, weeklies, monthlies, whatever it may be, they go up and to the right. And shorts maybe works for a couple months, a year. Quite a lot of the times, actually, you do have time-based capitulation. So you might actually have a bearish move and then we're going sideways like that and it's still a bear market when technically we're just going sideways. It's boring. No one's really making any money. Maybe you're making the money if you're on, if you're a day trader, if you're a scalper, whatever it may be. But if you're like an investor, there's just no money to be made in this kind of when it's dropped down, right? So that's one thing that I feel like is important to bear in mind. Time-based capitulation is also the same as price. So bear that in mind as well, when you're kind of thinking about these things. Find the trend, becomes a full-time job. Imagine, fighting the trend on the NASDAQ lately, or Nvidia, or even the S&P. These things are just going up to the right and trying to short everything. Yes, you could have got a great move on a lower time frame. Excuse me. You could have got a great move on a lower time frame, but ultimately these things are just going up and to the right. And technically, an optimist beats being a pessimist, right? I think that's like a summary. We'll kind of get into that later, but I think that's just such a good mindset to have. You should always want to be bullish than always be bearish, because typically that has worked in the past. So look, we've got gold, right? And if we're going to bring my mouse on here, we've got the chart on the weekly. It's a bit squished, but hopefully you can make it do. Okay, cool. Let's have a look. Where would be good shorts? Now, really, we can only see here, but look, maybe there. But look, that people would call that a bear market, but there's no real massive moves in that zone. Yes, you could argue it's slowly going down, but I'd call that a time-based capitulation. You could even argue all this thing here, it's just chop, it's just nothing. You're better off taking a couple stabs and maybe a couple daily trends in there. But, the moves like that and even like that, yeah, it's night and day. So you're going to get that as well. So it's definitely important to bear in mind. But look, the better opportunities were definitely on the long side here on gold. We've got the S&P, talked about this. Brilliant shorts there. But you've got brilliant longs, there, and even this little bit here. So look, there's just more opportunities, and they're longer. They tend to be longer. These, look, flash crash, brought back up. Maybe a bit different. Flash crash, brought back up. Flash crash, brought back up, and so on and so forth. So these moves tend to be short-lived, and you want to be optimistic in markets. You want to have the bullish mindset over the bearish mindset. If you go on the news, I feel like the news will kind of condition you to be bearish, but you want to be bullish. Bitcoin, a little bit different. It's not obviously a as mature chart as the others. Long, bang, back down there. Could have got a really nice short there. Much nicer long there. I mean, that's multiple percents. Then back down there. Back there. Tag that high. Great short, but, better opportunities there. And look, what you're going to get as well is short stops. And then this zone here, that you would have got your time-based capitulation. You would have got a drop down there. But look, boring you out, and that's what these things do. And yes, look, they do the same on the higher time frame. I remember this chop. I remember being active through here, and yeah, it was pretty brutal, right? But there was some nice opportunities to go, I guess through the ranges, if you like. But this is where you've probably got to be paying most attention. It's like when the moves happened, don't just get excited when the move happens. Carry on staying involved and interested. You could argue brilliant shorts there on Bitcoin, but remember, that is a 50% decline. Let's just go from 30 to, that's a 4x, right? 4x, or do you want it to go down 50%? make the choice yourself, but see what I mean? The multiples are better always to the long side. Silver, bit of a different one, but look, long there. I mean, you could probably argue just that part, maybe a couple nice ones there. And then look, time-based capitulation, again, really important to know. So many people would have got bored on silver through here, maybe excited here, bored through there, and then the people who carried on watching made so much money there. But look at that, great opportunity. That would have been good short opportunity. They are still out there. But look, I mean, that's dropped, 50%? That's gone up 3x top to bottom. See what I mean? So look, the opportunities are definitely better on that longer side. So you just need to bear that in mind. But also need to be thinking about, okay, cool, when it's doing this, it's building energy for that next move. You really need to be conscious of that. The DAX, here we are again. As you can see here, shorting. I mean, you would have got a great short in around COVID time. Bought back up. Brilliant opportunities on the longs. The Nikkei, the same. Look at that. Time-based capitulation. People would have got bored. If you were accumulating in this part, I mean, yeah, that's a pretty good investment. Yeah, it's over 20 years. But, what we talk about on this channel isn't... excuse me. What we talk about on this channel isn't, making money within a week. It's, trying to have that longer-term approach. Because, in my opinion, that's what works best, or what works best for me. So, look at that. Accumulating there when it's bored. So, when it's boring, be paying more attention than ever. Crude oil, I wanted to bring this on, not something I would touch because to me it's not going up and to the right like all these other ones, right? So a bit more tricky. You'll get nothing for a while, big move, and then it'll just come back down. You get nothing for a while, another thing. I mean, look at that. That's just crazy. Negative. I mean, that probably would have been the best short ever, right? So they do work shorts, but typically. I mean, you could argue that long there would have been pretty good as well. So typically the better longs, but I wanted to bring in oil just to say they don't all just go out of that. There's obviously a little bit of a different chart, different fundamentals, but wanted to bring it up anyway. The conclusion, even diversification only makes sense in one direction. So wanted to bring this in because I actually was doing some work with 10-year node futures. And I actually compared it side by side with that and gold and how they perform in crises. So in and around the dot-com bubble, around the global financial crisis, COVID, tariffs, and gold typically performs well, if not better. So I was thinking to myself, okay, cool, nice. I can add this as a diversifier into what I'm looking at because, what I'm looking at already, this could be another thing that will perform well when others don't. But gold performs well with that as well, which I thought was quite interesting, right? So, yeah, you got things like gold, Bitcoin, equities, commodities do not all move at the same time. There's going to be rotations. The stock market's the best example. You've got so many rotations, just capital kind of just cycling around. Obviously, there's new stuff coming in, but it's almost like that, if that's good. So, adding a short to a long portfolio, I wouldn't say is balanced. I would say look for. This is just my experience and my research. Look for longs in different assets. Look to be long in different places as opposed to long, short. Okay, cool. Can I long in a good way, in a structured way, wherever it may be, 8 things instead of go long and short the same thing? That's the way I would personally do it. So an optimist diversifies, a pessimist hedges. Remember that mindset. You want to be optimistic in markets because they always win. They always win. It always pays to be bullish. Have that positive mindset. That will just, pay more than being a pessimist. Because if you were a pessimist, you could have been a pessimist for the last decade. If you live in the UK, the FTSE, I haven't looked at the FTSE in a while, but when I last looked at it, it was up. It was at all-time highs. If you were bearish to the UK, the world's going to end, and you were ignoring price and what it was doing, then that wouldn't have been very good for yourself if you kept trying to short it, right? So always try being optimistic in markets. Obviously, I've got my free newsletter. Please sign up to that. Check it out. If you have any suggestions of what you want to see, what you want me to talk about in it, feel free to leave a comment below. All the data referenced here, obviously most of it is trading view and some of my own research. Thank you very much for watching, guys. Sign up to the newsletter and I'll see you in the next one.